Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. This will be a very important tutorial, so make sure that you stick throughout the end of the video without skipping any parts. And without further ado, let's jump straight onto the charts. This tutorial will be about decoding market trends. This is something that it's very overlooked, so it's very important that you stick to this tutorial till the end. Now, what I have identified here are turning areas in the market. Now, what we can easily identify is that from here, the market has turned into a downtrend. And from here, the market turned into an uptrend. And again, from here, the market turned into a downtrend. And before this, we were in an uptrend. This is very, very clear. Right now, we are here on the daily time frame. So we are speaking here about major trends. And there is a saying in the markets that trend is your friend, right? So you want to be able to always identify what kind of market you have. Are you in an uptrend or are you in a downtrend? Because obviously in an uptrend, longs will be favored. In a downtrend, shorts will be favored. So this is very important as a trader. You need to be able to identify market trends. And that is why this video will be very important, because we will be putting together these two concepts. So first, being able to on chart identify these turning points, and we will then also see what specific patterns happen around turning areas. And we will be putting together with what is going on from an institutional side of the market. So how are institutions shifting their positioning and how that obviously impacts these turning areas in the market, because obviously institutions take a lot of time to change their orders. That is the first thing that we have to speak about. When it comes to retail traders, we can just click the button, right? And the order gets executed. Even if it's like 100 lots or more, it still gets executed quite quickly, right? Without any kind of issues, because there is always enough liquidity in the market for retail traders to execute their orders, even if they're huge orders for retail traders. But when it comes to the institutional side of the market, it's a completely different story, because the orders are really, really big. So since in the market, for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. Sometimes there isn't, and actually most of the times, there isn't enough liquidity in the market. So that is why most of the times, turning points in the market will be horizontal price action, which goes on for many days. So these are usually called accumulation and distribution areas. So you have an uptrend, the market is clearly creating higher highs and higher lows. Then we have this horizontal price action that gets created, and this gives the possibility for many, many days in a row for institutions to be offloading their longs and potentially also start building some short positioning in that market. Then the market enters into a downtrend, and when the market again enters inside of this horizontal area, again, institutions start accumulating longs and taking profits on their shorts. And then a new uptrend is built. And again, there is some sideways price action in which institutions start taking profits on their longs and start closing their, in this case, opening their shorts, and then a new downtrend starts. So when you see an area of horizontal price action, you always have to ask yourself, is the trend about to shift? Are we about to shift from a daily bullish market to a daily bearish market? Because the very basic, we all know this, an uptrend is the creation of higher highs and higher lows. The downtrend is the creation of lower lows and lower highs. So are we about to shift? The question that you're always supposed to ask yourself when you are in a horizontal price action kind of situation is, are we about to shift from the creation of higher highs and higher lows, aka an uptrend, to the creation of lower lows and lower highs, aka a downtrend? Are we at that turning point? And usually a quick way to verify what institutions are doing is moving to the commitment of traders to see how they're moving their positioning. So if you are, for example, here on the CHF, which is already USD CHF, because all currencies on the spot are traded against the USD. So if you're looking at the data for the CHF, you are already looking at CHF USD. And what we know is that institutions take a lot of time to move their positioning. So let's say, for example, we are here. We are in this area. You see this horizontal price action after an uptrend. And you start asking yourself, okay, so are we starting to get a shift from a daily uptrend to now a daily downtrend? Well, what you're supposed to be looking is, are institutions now starting to short USD CHF? And to do that, we have to look here at the net positions. So if, for example, we start seeing that net positions, for example, get increased. So we went from minus 39K to minus 21K net positions, which essentially means that institutions are adding their longs, going from 4,000 longs to 16,000 longs, and decreasing their shorts from 45K shorts to 38K shorts. So if institutions are starting to long and close their shorts on the CHF, then it means that they are shorting USD CHF, because if institutions are longing the CHF and all currencies on the spot are traded against the USD, they're obviously shorting USD CHF by making the CHF stronger. So to long the CHF, they short USD CHF. And clearly this makes USD CHF weaker. So the answer is yes, there is a good probability that after this horizontal distribution phase in which institutions are shorting USD CHF, the market is going to enter into a downtrend. Then you get into this area here. Again, you see this horizontal price action. And again, you're supposed to be asking yourself, okay, are we about to shift from a daily bearish market to a daily bullish market? And again, we have to move here to the COT data. And what you're going to look at is, are institutions now moving back to the bearish side for the CHF? So to the bullish side for the USD CHF. You look here at the net positions, you see that they go from minus 21K to minus 43K, for example, and you see, okay, institutions are moving to the bearish side for the CHF. So they are increasing their shorts on the CHF, going from 38K to 48K, and decreasing their longs, going from 16K to 4.9K. So institutions are now shorting the CHF, so longing USD CHF. And if you have a horizontal price action with institutions longing USD CHF, in this case, you have an increased probability to then shift to a bullish trend once again. Then you see again this horizontal price action, and you're supposed to be asking yourself once again, are institutions now again, as in this case, moving back to the bearish side for USD CHF? You look at the commitment of traders, and again, if they are doing that, then yes, there is an increased probability to see an inversion of trend, which in this case, we can see that it was in fact exactly what was happening, because institutions were again increasing their net positions. We went from minus 43 all the way up to minus 37. So they were starting to move again back to the bullish side for the CHF, so to the bearish side for USD CHF. So they were shorting again USD CHF. And after that, the market now seems to again have fallen into a bearish market, creating this daily lower lows and lower highs. So the key takeaway from this video when it comes to decoding market trends is that you always are supposed to, when you have an uptrend or a downtrend and the market starts moving horizontally, you're always supposed to ask yourself, are we getting a shift from a bearish market to a bullish market from an institutional perspective? So are institutions starting to move back to the opposite side of this market? And if they are, there's a good probability to see an inversion of trend at those levels. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the tutorial, make sure that you click on the like button. Also, let me know in the comments below any new topics that you would like me to cover in new tutorials. Subscribe to the channel so you never miss updates, and I will see you in my next video.